Oh my gosh. We just heard the case for $13 million a coin. We're talking Bitcoin today on the 76 Report. Welcome to the program. I am Trish Regan. I'm joined by my incredibly brilliant colleague, co-founder at 76, Rob Hordon. Good to see you.
Great to see you, Trish.
So we're going to back up for a moment. We're going to tell the viewer what we did last week. We went to a Bitcoin conference in New York, and we heard a really fascinating speech by Michael Saylor, who we're going to have to bring on the show. He really made the case for Bitcoin. He's a believer. He wasn't always. It was very funny. He talked about the stages that one goes through. I think I've always kind of been seriously fascinated by this. I mean, I can go back to 2012 and it was trading around $10 and I was like, this is amazing. This is so cool. This is so interesting. But I didn't quite know how it would manifest itself. And today, Rob, we're looking around and BlackRock is trading it. There's a number of ETFs where you can actually, you look at Coinbase, the wallet. I mean, there are ways to invest in Bitcoin that I'm not sure, well, maybe some people imagined, but not everyone quite imagined so many years ago. And Michael Saylor, interestingly, if you guys don't know who he is, he made a huge bet in 2020 as the CEO of a major software company on Bitcoin. And it has paid off in spades. But he said, look, he wasn't always there. He used to think, what is that? What is that? And now he's been so converted that he actually really believes that this is a store of value in the future. And so as we look at it trading around 60K a coin right now, imagining how it would get to 13 million, I mean, he made an interesting and compelling case and we can discuss it. But I think I walked away, I'm curious about you, I walked away with a newfound appreciation for the changes in technology that are coming to money.
Absolutely. Yeah, it was a really great conference. You did a great job introducing Michael Saylor, and as always. And I think, I've been thinking about that presentation pretty much ever since. And that was, I guess, last Tuesday. I mean, because it was, I've seen a lot of pitches and a lot of presentations in my time. And this one really was pretty extraordinary. And what I think was really interesting about it is, I mean, we hear a lot about Bitcoin and there's a lot on YouTube and on the internet and a lot of hype and a lot of hoopla about Bitcoin. But I mean, this really came from someone with a very serious technology background and business background, right? I mean, this is someone who personally owns $1 billion worth of Bitcoin at this point, and whose interest in his company that he founded, MicroStrategy, which owns itself, I think it's about $13 billion worth of Bitcoin. So he owns something like, I don't want to get that wrong, but something around 10% of the company, maybe more, so he's got billions at stake via MicroStrategy.
Mm-hmm. And it's the largest, I think, holding of Bitcoin in the world. Is that correct?
Maybe in a company,
the largest single holding.
Yeah.
And it was a way, if you think about it, just not to interrupt you, but like it was a way for investors. You could buy shares in his company, and it was effectively a way, you still can, of investing in Bitcoin without actually having to go through the process of the hard wallet or the cold wallet, as they'd say, et cetera. So, but he obviously, he's incentivized. He now has this big investment to really see it move higher. But I don't think that's all that was talking there. I mean, he wasn't just talking his book. I mean, it's funny how people they get sort of this religion about it, but I see it. I mean, things as we know it are changing really rapidly, and tech is moving really fast. I'm very excited about it. The viewers know that, that. I talk about it a lot only because I think this time it is different. This is not the year 2000 and we suddenly discovered the internet. You're talking about Web 3.0, the metaverse, et cetera. This ability to kind of, think teleportation, right? Like back in the Star Trek days, like it's all coming. It's all happening. And Bitcoin is part of that.
Yeah, absolutely. And so, is he sure he's talking his book and he's become one of the big voices and champions of Bitcoin as a movement. And I think he's quite unapologetic about that. But at the same time, I don't think he's obligated to have such a large exposure to Bitcoin, right? It's like he could diversify his investments.
But he's never sold any. That cracks me up. He's like, he never sells. And he's like, I buy it when it's low and I buy it when it's high and I just keep buying it.
Yep, and it's worked out quite well. So his perspective is fascinating, and I would encourage people to find it on on his Twitter handle or on his X handle. On actually, he has his own website, Michael.com, which I guess
There you go.
once you're a Bitcoin billionaire, we could get our own domains that are just our first name. But no, there's a wealth of content there, and the perspective itself is just really interesting because what he's describing is Bitcoin as what he calls the perfect money. He used a lot of the presentation was about kind of figuring out what's the right way to describe Bitcoin or what's the right mental model to think about it. And it's in his mind, it's the perfect money. It's digital currency. It's the ideal way or a great technology that moves us forward in terms of storing economic value. So there was so much about that presentation that was extremely enlightening. And
Well, yeah, I mean, and look, go to michael.com, you can check it out. Maybe we can put a link somewhere. I think we sent it out on the research newsletter, which, by the way, I will give a quick plug for, because I do believe that we sent out a link to it there. And if you want to sign up for the 76 report, you should do so. 76 Research is the website. And I would encourage you to go there, use code word dollar. Let me get it up one more time. Code word dollar, so that you are only going to pay $1 for the first 2 months, and it goes to $9.95 thereafter. But we put out Michael's because it was that compelling. And we do a lot of these things. We go to a lot of these things. We've been to a lot of these things. It's unusual, I think, for us to say, okay, now we have to, it was that monumental and it was that groundbreaking and it was that interesting that it was just something we really felt compelled to share. And one of the reasons why we're talking about this today. But $13 million, I mean, that's the one where, full disclosure. So everybody's like, did you buy Bitcoin back when it was 10, Trish? Nope. My husband's like, hey, if you ever have these premonitions again and you really get into something, you might want to actually follow through. And I remember thinking it was a little bit hard. I didn't really understand how I could buy it. I knew some people that wound up in jail that had been at the forefront of this movement. And I was like, can I even buy it? So it was this sort of no-go territory. And since then, it's really been, shall I say, gentrified, right? Because now all of a sudden you can get it through BlackRock and other different ways. So we'll talk about that. But first, let's back up for a moment. I just want to talk about what is Bitcoin, because to me it represents a few different things. I remember reading Satoshi's paper way back when and being like, oh my gosh, so there's this guy or guys and gals, we don't really know because you don't really know who the creator of Bitcoin actually is, who came up with this concept to hide all these Bitcoins all over the internet, and you would go out and mine them with these really intricate mathematical equations. And the more you mined the coins, the more difficult the mathematical equations would become. The thinking being that there's only a finite amount of Bitcoin, and once it's gone, right? Then you have to trade the Bitcoin amongst yourselves, but you can't just keep mining it forever. And it's similar in some ways. It's been proposed to gold in that sense, because there's only so much gold in the earth. Well, there's only so much Bitcoin in the universe that's been hidden in all these different places. So nobody really knows who created it, but people are very actively mining it. And the thinking initially was, hey, can we get away from some kind of central bank policy that's going to be very inflationary? I mean, that's what happens, right? They just keep printing, and then Congress comes up with the Inflation Reduction Act, which we know is not actually going to reduce inflation. They print some more, so you get the Fed, you get governments. Everybody's putting all this paper money out into circulation. Well, what if there was a way to have something different? And maybe not even totally traceable. I mean, it is because it's on the blockchain, and that's a whole other debate. But something that was a little bit more incognito, that would preserve its value over time, and that would be hard to get. This was effectively what was pitched, and a lot of people got, myself included, very, very interested in this idea. And since then, it's skyrocketed. It's now at some $60,000 a coin, and a lot of financial institutions are getting in on the action with opportunities for everyday investors to invest in this stuff too. What is, in your estimation, I'm sort of giving you my 60-second synopsis of it, but what does Bitcoin represent to you, Rob?
Yeah, I
Store
think
value?
the gold. Well, I think the gold analogy is useful, although it only goes so far, because the reality is the analogy applies in that gold exists outside of government regulation or government control, right? Gold is just a naturally occurring element on Earth. There's a finite supply of it. It's difficult to mine. Only 1 to 2% gets created every year. So gold just exists in the natural world, and it's always sort of been used as a store of value throughout civilization. And governments come and go, but gold stays. So Bitcoin is similar in that it's a decentralized digital platform that really operates without the involvement of any government entity. So in that sense, it's sort of similar to gold, but it's also very similar to fiat money in that there actually is no underlying reality to it. There's no, um, naturally occurring element like gold. There's nothing you can touch or taste or smell or see. It's conceptual. It's abstract, and that's what actually, in Michael Saylor's estimation, is what makes it such a perfect.
I think we may have lost Rob here, but he's saying this is what makes it such a perfect store of value, if you would. I mean, one of the things that Michael pointed to, which I thought was super interesting, was that you spend all this money like keeping up your real estate. You spend all this money keeping up, say, your boat or this, that, and the other. You're talking about how wealthy people actually store capital, and storing capital can become quite a headache, right? After a while, and it comes with a lot of costs because you got to maintain all these things. Well, what if you could store your capital most efficiently? I mean, he even mentioned like equity markets, you run certain kinds of risk with regulations and who's in and out of power and taxes, et cetera. And so all of this comes with a certain amount of baggage, if you would. And the advantage you would theoretically have with Bitcoin is that you can just park it, right? And you don't have to worry about it in the same way. Now you have to worry about it in terms of volatility because it goes up and it goes down. And it's like all over the place. And, you could have a strong stomach if you're a Bitcoin investor. It's why I encourage people to just do, a little bit here, a little bit there. But, I mean, unless you're a maximalist, right? The Bitcoin maximalist. But I think that the reality becomes, do we have a better way of being able to store value in an efficient possible way where you're not going to have to worry about all the things that come along? And so as this catches on, the thinking is that yes, you'll reach a point where there are no more Bitcoins, and more people will be interested in investing in it. And as such, you're going to be approaching a much higher valuation. Rob is back with us. Let's talk a little bit about the politics of Bitcoin itself, because at this conference, I'm very aware in this sort of day and age of people being very partisan one way or the other. But I always make the point that like, you really don't have to be as an investor, right? Like as an investor, you just want what's going to make you money. All that said, it was interesting to me. One of the people that I interviewed there was Vivek Ramaswamy. A lot of the viewers from the Trish Regan show anyway know him well. Of course, Americans know him because he ran for president. He is very interested in this space. He has a biotech background, so you combine sort of tech, a little bit of politics, and he's been very pro Bitcoin, Ethereum, cryptos in general. There are some political hurdles. I mean, think about it. If you're a country, you want to print your own money. You don't necessarily want people going and buying Bitcoins and trading with Bitcoins. Not that they would, because again, if we're thinking about it as a store of value that's not very taxing on you. But I think there's this fear among many that it's a little bit too Wild West, and it might actually replace, dare I say, the authority of the United States central bank.
Yep. So the politics of it is really the fascinating part of it, and I think it's actually one of the things that was really eye-opening to me about Michael Saylor's presentation, and sort of like one of the key reasons why I would say he's saying it eventually makes its way to 13 million over the next 20 years, which, by the way, is just his base case forecast. The idea is basically that, over time, Bitcoin, when it first started, as you've kind of talked about, like it was potentially illegal, and there's always been a lot of concerns about it being banned. And over time, it's just made its way into, it's become more integrated within our political, legal, economic system, and gradually just made these inroads. So it's becoming more legitimate. It's more of a legitimate financial instrument. To some extent, it's almost like capturing Wall Street. So much money is being made off of Bitcoin now because it's actually a pretty sizable asset class in and of itself. Bitcoin alone is about 1.2 trillion of market value when 60,000 times just
It's
under
like a
20
company.
million. You know what it's like, Trish? It's basically the size of Meta. It's the same market cap as Meta or Facebook.
Interesting.
So it's like a Mag 7 unto a company unto itself, and I don't think that's a bad way to think about Bitcoin as a stock. You're not, or you're really making an investment in a technology platform, sort of in the same way when you buy Meta, you're making an investment in a different way into a business that owns technology platforms like Facebook and Instagram and WhatsApp. But here you're buying it directly, like a direct share of that platform, rather than the traditional model that's intermediated through the government through ownership of a company. So that to me is a very
Okay. I mean, I'm going to pick that one apart because the ETFs obviously are the intermediaries, but you can actually still go buy a Bitcoin in a hard wallet, which, by the way, means cold. Forgive me. I got to get my terminology right. The Bitcoin fanatics will not be happy. But the cold wallet, right? Like it's like that thing. As long as you memorize your numbers and your password, like that's yours forever, even in the deepest, darkest times, which is, wild. But that's the thinking on it. You do have some middlemen though nowadays.
Yeah, and I think historically, like the way people have thought about Bitcoin is saying, well, I want to eliminate the middleman, I want to eliminate the government, I want an asset that I can own directly, and that's the nature of its value. Sort of the way people kind of think about gold is being outside the grasp of government entities. I think what Michael Saylor was saying is that actually Bitcoin's future value is actually more predicated not on it being this sort of outlaw form of money, but the fact that it's becoming integrated within our system, that it's becoming not just legalized, but embraced within our financial system. And we see it now. Saylor played a clip from Larry Fink talking about the about face he did on Bitcoin, because now BlackRock offers Bitcoin ETFs. Okay, so now you have basically the largest asset managers making money off of Bitcoin. You have politicians.
Right, so then it makes it a little bit more politically protected. A lot of diehards would say, wait a second, this is not what we wanted. This kind of destroys the whole premise of it. But, I do think that for it to really work and for it to work long term, you do need some buy-in, right? Like everybody can't keep going to jail, like what I saw initially.
Yeah, I think this is Michael Saylor's premise, is that it's actually becoming it's going to become a high method of transferring and storing value within the US economy over time. And it's making inroads. And right now its market cap is along the lines of 1.2 trillion, but he thinks and that's like 0.1% of total global assets. He thinks over time, his base case is it gets to like 7% of total global assets, which by 2045, he predicts will be, Bitcoin's going to go up basically 200-fold from here.
I want to talk about the sort of challenge between like Bitcoin and gold. One of the things that I've come across in my experience reporting on Bitcoin and on gold, because I do like both asset classes, is that there's a little bit of hostility in both camps, right? Maybe more so coming from the Bitcoin camp, because they don't want to, see themselves as gold. And actually they would argue that you should be investing in Bitcoin instead of gold. But I actually come away with something sort of different. First of all, they don't mimic each other, which, for better or for worse, some people say, well, is it a safe haven asset? Perhaps not, right? Not when it's going up 20, 30, 40% and then down 20, 30, 40%. You have to have kind of a very strong stomach for that. So I don't necessarily see it as one of those safe haven assets. Maybe it's that asset that you have when all hell breaks loose and you want to have some Bitcoin, or maybe it's the asset of the future in that you're just recognizing that it will increasingly become this store of value. Does it replace gold? No, I don't think so. I think that gold will still have its place. And so the gold bugs should not worry about that. The Bitcoin maximalists, I think, should also sort of make room for everyone at the table here and say, okay, it's actually very different than gold. Maybe, gold is tracking sort of the fear factor. Gold helps on the inflationary side of things. But Bitcoin I actually see as more of a tech play, and therefore in a class unto itself. What's your take?
Yeah, I agree. I don't see them as being competitors. If the idea is that Bitcoin is going to become a new technology that really gains tremendous prominence and becomes tremendously valuable and the world utilizes it, I see it coexisting with other asset classes and coexisting with gold and potentially dragging gold up with it. In terms of investors in Bitcoin, seeking diversification in uncorrelated asset classes like gold. So
it's not an either or. It might be like one of each.
Yeah, and by the way, Bitcoin is not the only cryptocurrency out there. And that's another very interesting angle here and thing to get your mind around.
I'm glad you brought it up. There's a lot of cryptos out there, like perhaps too many, but there's a lot out there. And the two that sort of have been most striking to me include Bitcoin and Ethereum. And they actually serve two different purposes, which is quite important. Like, people don't realize this necessarily, but Ethereum, as it's been explained, is almost like, it's almost like your working capital, like your working cash. And then Bitcoin is your savings. I mean, I think that's perhaps the best way we can sort of characterize this, Rob, because Ethereum is the kind of stuff that, you could settle a transaction in Ethereum, like derivatives contracts for investors, right? Hey, when this stock gets to this, I want to make sure that I invest this much more. I want to take this much out. That can all be written into the code. Think about that. Yeah. It's written into the actual crypto code. So you're just bypassing like layers and layers and layers of traditional technology, lawyers, contracts, etc., and you're just making it happen. And so that's a great way of thinking about Ethereum. Bitcoin, on the other hand, is that thing that just kind of, it's not as facile, I guess, in that way, because you're not settling contracts on the fly with it. It's not getting written into the code, but it is that store of value. So when I look at the future and I see tech as a big part of this, I think we have to think about the future of money. Like, look, when I was a kid, everybody paid cash. I remember my dad, like every time we'd go on a trip, right, he'd go to the bank and he'd get out those American Express traveler's checks. Remember those? Like, I had them myself. I remember studying in Austria, and I would go into my bank and I'd present a traveler's check and they'd check my passport and I'd get my cash. And nowadays you don't need any of that. You have your credit card. But even then, you got to deal with the headache of, do you want to pay in euros? In my case, I was just in Europe. Or do you want to pay in dollars? Well, I'm going to pay in dollars because I get a better exchange rate from my bank that's not going to charge me surcharges, et cetera. I'm not going to get as good an exchange rate from the hotel. But the fact that this is all happening wouldn't need to happen if I was actually paying in a cryptocurrency.
Yeah, or maybe ultimately the credit card companies, which they're exploring, the Visa and MasterCards of the world, are heavily investing in, how do they incorporate crypto into their network. Sure. Yeah, I would say in terms of the way, maybe a good like kind of 10,000 foot view of the crypto universe, you do have Bitcoin as kind of like the 800-pound gorilla within cryptocurrencies. I think it's in the order of like 55% share of the total value of all cryptocurrencies. Ethereum is like the number two something like 10 to 15% of the total value of all cryptocurrencies. And then there's several other kind of rising, Solana, XRP. There are other kind of coins that are rising. And I think each of these represent different technologies, and in some cases different use cases, like you were highlighting. So with Bitcoin, you've got this is really on store of value, transfer of value. With Ethereum, it's more about the application is not just for monetary purposes, but it's programmable. So you can create these contracts between two parties that can be settled without intermediaries. So again, without the need for lawyers and some kind of legal adjudication, because it's automatic. If
right.
you and I make
and I think that's just honestly, like, that's just the future. And I even look at it in terms of financial markets, like is that the future there? I mean, you think the derivatives contracts and all the deals and what's going on at, the Chicago Mercantile Exchange, et cetera. I think that there's a lot that we haven't yet explored. And so I look to sort of embrace these technologies, if you would, and understand what they can mean for all of us here in the future. And I'm excited by it. Like I really, really am excited by it, because I think that the world is going to be completely different a decade from now. And, we're going to look back and say, oh yeah, I don't know if it's going to make it to 13 million. I can't remember what date he had on that time frame, but I look at it as, what was it?
It was 2045.
Okay. I look at it as something that, like, I want to be exposed to. And I'm not giving, we actually haven't included this in our American resilience portfolio, which incidentally is doing well. We had a stock that was way up that we recently bought. I'm just giving everybody the 76 Research pitch. Go to 76research.com. Look at that American resilience portfolio. Look at the inflation protection portfolio. Look at the basic income portfolio. There's a lot of really good information there for you. Stocks, specific names, 10 to 15 in each one of those portfolios. You can get the Founders Club. You get everything that way. You get all of our picks. And I'm not kidding when I'm telling you, this guy I'm talking with is truly, truly brilliant and has had a phenomenal couple of decades, running billions of dollars. And he's thinking about this like how he would invest. So there's no conflicts here. There's no bias. There's just, how do you make money, in the long term? I don't want to say you're going to make money overnight, although some of these stocks have done really well. That's not our goal. Our goal is really to set you up and have that kind of stability. And hopefully our research enables you to do that. But you can go to 76research.com, go and get those model portfolios. Type in code word dollar if you want to get the 76 report, which is sort of all encompassing. And in fact, we just did a huge report on Bitcoin and Ethereum and miners. And it's such a fascinating, really, really interesting space. You were funny. I was talking to you recently and you said something about, could I buy a Rolex or a Bitcoin? I'd almost rather have a Bitcoin. Why would you rather have a Bitcoin than a Rolex?
Sure. I mean, Rolex is an interesting asset class, and we have some mutual friends, maybe they're watching, who like to collect them, but and they have appreciated over time. But they are tangible assets and somewhat scarce, but they can also be produced. But I don't think the massive upside exists in buying a Rolex today and sitting on it versus what's potentially going to happen with Bitcoin or Ethereum or some of these other digital currencies. Trish, I think it's interesting. We were just talking about 76 Research and the fact that our whole premise is that we're giving, what we really believe to be good, solid, honest investment recommendations, how we're thinking about investments ourselves. And I think, when it comes to like the crypto space, that's very important. We're not here to promote crypto. We're not here to bash crypto. I'm trying to figure it out for myself. And, when I look at plausible scenarios where there could be immense further value creation beyond the 1.2 trillion that we've already experienced over the last 15 years, and there is a viable possibility that, one could buy Bitcoin today and it goes up many, many, many times over the next, over a long time period, you got to take that seriously, and you really have to figure that out. And
is it like insurance?
Yeah, well, we talked about.
I need some insurance because I want some exposure just in case these guys are really right.
So one way I've been trying to think about what is a prudent person to do when it comes to Bitcoin. What is the right allocation within your portfolio? So you can make that analogy to the stock market and say, well, Meta is 2.5% of the S&P 500 or 1.5% of global equities. So and they have similar market caps. So maybe that's kind of like a good starting point to think about, like what's an index type allocation to Bitcoin itself. But there is a risk. The risk goes both ways. Sure, maybe Bitcoin's a scam. Maybe it falls apart, and all of the things that the negative that the skeptics and the bears say. In which case, you lose potentially up to 100% of your investment. On the other hand, if folks like Michael Saylor are directionally correct, and there's vast additional upside to be had, you do not really want to miss out on that. And
so it's one of those holdings that you just kind of buy and hold, and you watch and you see, and you're not like trading in and out of it. You're just, because I'm not somebody in general, right, who's trying to trade in and out of things. I know you're not either. You don't want the cap gains. If nothing else, you don't want the cap gains hit. When things go way up, you trade it, and then you're going to pay some taxes on it. Ideally, you wait until an appropriate time in your life when you're sort of ready to be selling assets like that. But if I have a friend who bought Bitcoin years ago, and really, it's a religion, right? For him, a real religion. And it didn't matter. Like, Bitcoin could go to zero and he would still hold it and value it and love it as much as, if it was at $1 million. He just is really, really sort of wedded to this idea. And I guess he's one of the maximalists. I'm not there, but I'm also just, very practical. And I hear you. I'm with you, because you want to have some exposure, in my estimation anyway, for my own personal being. I want some exposure to the potential upside, and I don't want to look back and be like, oh my gosh, I should have done that. Like, why didn't I? Right.
And if you bought, even if it were just 1% allocation and it did go up 10 times, well, then maybe over time it would become something like a 10% allocation within your portfolio. So there would be material participation in that.
Yes.
Certainly, you'd look back in retrospect and say, gee, I should have put all my money in it. But obviously but obviously that's how investing goes. You want diversification. When you're dealing with highly volatile, high risk investments like cryptocurrencies, the way you address that is through position sizing, and you don't make it a huge chunk of your portfolio. You appropriately size it based on the volatility. As you might like a tech stock, a highly volatile tech stock that could fail too, right? So that's how I would suggest investors.
That's how you think about it, like a highly volatile tech stock. Just doesn't have any earnings.
Well,
some of the tech stocks back in the day didn't have any earnings either.
A lot of assets, though. Gold doesn't really have any earnings, or artwork doesn't have earnings, or land. Well, land you can lease out, but actually, with Ethereum, you could stake it, and there's a method to generate income off of Ethereum, which is sort of a interesting detail about that particular technology or how that one works. Don't ask me to explain
we can do that in another show, another time. Yeah. But for the diehards out there. But if you're interested in all of this, again, we put a pretty comprehensive report out just on Friday, and I really encourage people to go to 76 Research to get the 76 report. You can just use code word dollar, DOLLAR. One of these days, just for fun, we should change it to code word Bitcoin. Right? Just for the heck of it. Just for a couple of weeks, and then we'll get to see who really, really is into Bitcoin. But anyway, use code word dollar, DOLLAR at 76research.com and read that report. Again, I don't, we never want to steer you wrong. We have no bias in this other than, we're in real time figuring it out ourselves as well. And we were certainly impressed. I've always been very impressed by this space. I think that there's much, much more to come there. Go over to 76 Research, get the report, and we will see you back here on the channel and on the show. Can you believe that, Rob? I went this whole time and I forgot to ask people to subscribe to the channel at 76 Research. And we'll see you back here and on the Trish Regan Show. Hey, Rob, good to see you.
Good to see you. Bye.